Dear students, Assalamu alaikum wa rahmatullahi wa barakatuh. I hope everybody is doing well and in great health. Our topic for today's discussion is installment liquidation. If you remember, in the last lecture of partnership liquidations, you have learned how to liquidate a business at once. But today we are learning how we can liquidate a business not at once, rather in number of installments. How? Portion of the assets are sold out in 1 month, right? Portion of liabilities are paid, and also to some partners through a safe payment is made. Some payment is made to them, right? And a portion is paid in the second month. Okay, so it's mean the business is not liquidated at once. You can say half of the business is liquidated in 1 month and half another is liquidated in another month. And it may also be possible that it can be liquidated even not in 2 installments, rather in 3 one. Okay, so in most of the cases, you can say for businesses it's not really easy to liquidate itself. Why? Because of some complication, because of the liquidity of assets, or because of many other issues. So that is why installment liquidation is preferred. So now practically we are learning through example how it is happening. So here is an exercise. So look here. So look, dear students, into this exercise. What we have ABCD balance sheet, where we have cash and asset in the left side, 98,000. The right side we have liabilities in ABCD partners. In 98,000 we have claims. Okay, now how this business is liquidated? Look here. In 2 months, in April and May. So 40,000 out of total asset. How much is total? 98,000. Look, sorry, 90,000. Okay, so in this 90,000, right, 40,000 are sold by 25,000, so 15,000 losses in the first month. And out of 90,000, right, 50,000 are sold, right, 50,000 are sold by how much? By 30,000, so 20,000 we have losses in the second month. So it means a business is liquidated here in 2 months. And what is the profit and loss ratio? 4:3:1. This is a profit and loss ratio, and this is expenses, right? The future expenses. It means in April there is no expenses, so we have the expenses only expected in May. Okay, and this is the ratio. We have 4:3:1. It means the A partner is sharing 40% losses and 40% in profit. Okay, and then we have B, C and D, 30, 20, 10% respectively. Okay, dear students, now look into this table. We have a column. This is exactly like accounting equation. We have cash, asset, liabilities, A, B, C, D. When you learn the concept and the idea how it is liquidated, then you will learn all these steps. Okay, what we do here in this table, this is exactly like the previous one, the last lecture. If you studied the last lecture, so look here what we are doing briefly. We are just posting all these values to their respective columns. Okay, so we have cash, that is how much? 8,000. And then we have assets, right, and then liabilities, and then we have A, that is 13,000, and we have B and C value, and then we have D. Okay, you can write them also manually, just easy equal sign and click the value that is coming here. Okay, now first we start with April transaction. So in April month, look here. In April, 40,000 sold by how much? 25,000. We are exactly doing the same. Okay, so look here, you can say cash, how much we are receiving, 25,000 cash we are receiving, 25,000. And how much we have assets reduced here, 40,000. We are paying, selling 40,000 assets and receiving 25,000. So how much is losses? 15,000 is losses, right? So now we are distributing losses over these partners. So equal sign, right, minus. Why? Because we subtract the value and then write 15,000 multiply, how much is the ratio of the A? 0.4. okay, and just we have equal sign, again we have how much, 15,000 losses, and multiply into 0.3. This is the ratio of the second individual. You can drag it to the right and just change the ratio. So we have 2 here and we have 1 here. Okay, so also make it negative. Why? Because all values are what? Negative. We subtract it here. Okay, now how much is the payment of liabilities? At the end of April, 5,000 liabilities paid. It's mean the first month, how much? 5,000. So 5,000 cash is reduced here, and also liability 5,000 should be deducted from. And now you have to balance it, so sum and just add all the values, right? Take the value in the range from beginning to the end and just drag it to the right. So these are the balances at the end of April. Okay, students, now what we are doing, a safe payment to partners, as it is installment liquidation, then we have partially paid the liabilities. So also we have to pay to partners also, but to whom we have to pay, it's not certain, as the liabilities of all these partners unlimited. We have unlimited liabilities. So it means if you pay them now and tomorrow and after a month, if their account become negative and you call them back to bring the amount to in order to compensate the losses, then there is no logic behind to make them a payment in advance blindly. So what we do, what can help us to make a safe payment to the partners, right? So dear student, we have here one schedule by the name of safe payment calculation, and this can help us have to figure out and determine to whom we can make a payment. Okay, so look dear students, simply just copy all these values here into here, right? Paste it, but paste special. Okay, why paste special? Why? Because there is a formula, and just paste the value. We are not interested in formula. Okay, now what we are doing, what is actually in the safe payment calculation, we are assuming that maybe in the future there is 100% losses, remaining 50,000 assets may be lost totally. So we assume what will happen. For example, if minus 50,000 is totally going and we are receiving instead 0 cash. Okay, so how much is the losses? We have to subtract from all of them. So again 50,000 value and multiply with the ratio. How much is the ratio of A? 40%, right? And enter, and then you have to drag it to the right and only change what? The ratio. Okay, 3 we have, and then 2, and then 1. Okay, okay, how much is future expenses? Okay, we have expenses that is 7,000 in the future. Also liquidation expenses we have, so minus 7,000 expenses, and also the same ratio, you have to subtract expenses from all of them. So 7,000 multiply, what is the ratio of the first partner? That is 40%, and then drag it to the right and only change the ratio for each partners. Okay, 2, and finally we have 1. Okay, now how much is liabilities? Okay, if we pay here 5,000, it means the 10,000 to be paid in the future, so minus we have 10,000, and also from liabilities minus 10,000. Right, now balance, so sum, take the values from the first to the end and just press enter. Now drag it to the right. Okay, dear students, look here, if we have losses in the future, 100% losses in the future, so one individual account become negative. If you remember, negative is a debit balance. Okay, we explained in the last lecture about the negative value, right? And what is negative? What is negative? This negative is this is debit balance. It means one partner balance will become negative, right? So what we should do in order to continue the process, we have to subtract from B, C, D, and we should give them to whom? To A. So look here, dear students, what we have here, whose account is negative? A. So it's mean the A is crossed, so we have 3, 2, 1, right? So add all these ratios. When you add them is equal to how much? 6. Okay, so now we are getting the new ratio. What is the new ratio? So 3 over 6, right? The first one. Okay, 3 over 6, if you simplify it, it's equal to 1 over 2. Okay, and also 2 over 6, and we have 1 over 6. Clear? 3 over 6 and 2 over 6, right? And 1 over 6. Even if you wanna show it exactly as you want it. Okay, right? Okay, so once again, this ratio is gone. We have 3 over 6, 2 over 6, and 1 over 6. Okay, so what to do right now? Just come here, subtract from B by which ratio? By 3 over 6, which is equal to 1 over 2. Okay, so equal sign, take this value and multiply 3 over 6. This 1 over 2, try not to be confused, this is actually 3 over 6. Okay, Excel automatically simplified it. Okay, so you can say 1 over 2. Okay, so equal to 7,900, and also subtract from this also, and this is 2 over 6 is equal to 1 over 3. Okay, yes, and then we have equal sign this value and subtract with, this is which one? This is 1 over 6, 1 over 6. Okay, so and add 15,800 here. Okay, what you have learned here, try not to be confused. We have look 15,800, we have subtracted from the B, how much? This much. By which ratio? By this ratio, right? And also we have subtracted from C, by which ratio? This ratio. And from D using this ratio, right? Okay, and have these ratios are computed. Okay, whose account is negative? Okay, cross the ratio and just count the total, the remaining ratios value, and then compute new ratios. So this is 3 over 6, and this is 2 over 6, and this is 1 over 6. And 3 over 6, when you simplify, it's 1 over 2, and 2 over 6 is 1 over 3, and then 1 over 6. Okay, okay, now what you should do, you have to balance this row, equal sign and sum, right, from the, okay, you can the last two rows, okay, and just when you submit, okay, now again we have another individual account is negative. It's mean in the last time, if you remember, whose account was negative? This account was negative, right? Now we have C, another individual account is negative, right? Now compute 8 3 in 1 is equal to 4. Okay, so if it is 4, we are getting no ratio. One is 3 over 4 and 1 over 4, right? 3 1 4, 3 over 4, 1 over 4. So it means from this individual you have to subtract, right? How much? Multiply with 3 over 4, and from this individual you have to multiply with how much? 1 over 4, and add it here with 2167. Okay, so it means we have taken the values from this and also from this by which ratio? By 3 over 4, and here is 1 over 4, and add it back here. Clear? And now just compute the balance, the last two rows. Okay, dear students, what is the conclusion? Only two individual, okay, only two individual you can make a payment to them in April. This is called a safe payment. There is no risk, right? Why? Because even if there is 100% losses, don't be afraid. Make a payment to BND, but how much? This much, not more. This is called safe payment, and this is what we can make a payment in the first month. Okay, so what to do now? We are copying these values from here and just pasting it here. Okay, paste special and values. Okay, just make this value negative, okay, because it is negative. We are paying 11,000 to these two individuals. Okay, I hope you got it. What does this mean? This means in April you can only make a payment to A and D. So we are paying B, so the capital is decreasing, and the D capital is decreasing, and when we are paying cash, so the cash is decreasing. Okay, now we are coming into the May transactions. In the May, what is happening in the May? 50,000 assets are sold by 30,000. It means in May we have 50,000. So just come into the My transaction. This is only heading, try not to be confused here. Come into the sale of transaction here. In the May minus 50,000, it means 50,000 asset is going out. Instead we are receiving 30,000. Luckily, not huge loss. In safe payment, just we assumed, but now we are in the actual situation. So we are selling 50,000 and we are getting 30,000. We have a losses of 20,000. So subtract the losses of 20,000. So 20,000 and multiply into 0.4. Okay, and just drag to the right and just change the ratio. And this is 3, and this we have is 3, and we have 2, right? And then we have 1. Okay, now payment to liabilities. Yes, in the actual situation we have paid 5,000 in the first month. We have the remaining 15,000, so my remaining 10,000. Okay, how much in liabilities we have remaining here? 5,000. Okay, how much is liability? The last row of 50,000. Okay, okay students, we have not balance here. This balance is remaining. Okay, yes, we are going right, but here only one balance is remaining, so you should balance this also, sum, right, and from balance to balance, these two rows not yet balanced. Okay, yes, now we have balanced. Okay, okay, come here now. So payment of liabilities, how much liabilities we have here is 10,000. So minus 10,000 liabilities we are paying. Okay, okay, and also minus 10,000 from cash. Okay, so if you pay liabilities, so the cash is decreasing and also liability decreasing. How much is future expenses? That is minus 7,000, and also you have to subtract expenses using the same ratio. So we have minus 7,000 multiply with 0.4, okay, and then drag it to the right. Just change the value. We have 3 here, and then we have 2 here, and then we have 1. Okay, this is the balances of the April. Now we are continuing our liquidation. So what we are doing here, we are selling the 50,000 and we are just getting 50,000 asset and getting 30,000, and this is the loss we have distributed, and here we have paid the remaining liabilities, and also we have paid expenses. Okay, now balance it. So have to balance from the balance. What is the balance? Start from the balance up to the end. Okay, each time when you add the value, so you have to start from the balance. Take the range, the value in the range starting from the balance. Okay, and press enter, and now drag to the right. So dear students, look here. One A is an individual, his account is negative. It means he is having a negative balance. Okay, so what we should do, okay, we should allocate the negative balance. This is a negative balance, and we should allocate it. We should take the values from 3 of them and add it here, and like in the last we have done. So have to do it very much easy. Okay, we have the ratios. So look here, dear students, the first ratio is, we are not, okay, this is negative, and add 3 of them. 3 to 1 is equal to 6, right? And now you have to subtract the values here. Okay, the ratio is clear. So equal sign and multiply this with these values. We have 6, right? So 3 over 6, 3 over 6. Okay, and click on this value, and then we have 2 over 6, right? Here we have multiply 2 over 6, and here equal sign, then click on the value and multiply with 1 over 6. Okay, now you have to add 3,800 here. We have allocated. So look here again. I'm again repeating this point. So look here, this is a negative balances. We have taken this much amount from this value using which ratio? Here is a new ratio, which is 3 over 6, because 3 plus 2 plus 1 is 6. So 3 over 6 is a new ratio, and here we have 2 over 6, another ratio, and here we have 1 over 6. Okay, so it means we are subtracting a value from F account by the ratio of 3 over 6, and here is 2 and 1 over 6, and that amount, when you add it back in, that is equal to 3,800. Okay, I hope you got it. Now we are balancing. Okay, so equal sign is sum. When you take a sum, just a last rows. Why? Because I am just again repeating that you have to take the value starting in the range from the balance. Okay, and just press enter, and okay, drag to the right. So now we have all the value positives. Okay, all values are positive. So this much cash we have attained, and this is the claim FGH is receiving. Okay, one partner is negative, his amount is negative right now. F and G and H is receiving this much amount. Okay, and the another partner E should compensate the losses, this much losses, 3,800, and he will in the future, or he should, and he must, he must pay to F how much? 19,900, into G this much, into H this much. It's mean he should bring this much amount back, and that is to be given to these individual. Okay, right now in this amount of 30,000 each partner F in G and H receiving this much. Okay, now we are paying to them. Okay, when you pay to them, what is happening? Look, okay, we have final payment equal to we minus 30,000, and then minus this value, and minus this value, and minus this value, right? Okay, now again you have to add the last two values, last from the balance into the balance, and just straight into the right, and with this it's finished. Dear students, look here, why these values are negative. It means we are paying the cash to the partner, the final cash, so the cash is decreasing and the capital is decreasing, and at the end the business is 100% liquidated and we have a zero balance. So I hope you have learned how to practically liquidate a business in installments. So in our example it was 2 installments. Okay, now I'm just quickly telling you about the transactions. So what debited and what credited. Okay, again, look dear students, we are starting from here. This is cash. Okay, increase, so anything which debited we make it in yellow. So cash increase, increase in asset, debit. Here is asset, asset decrease, so make it blue, right? Light blue. Okay, now capital decrease, a capital decrease. Decrease in capital is debit or credit? Debit. Okay, debit, and here is debit, debit and debit. Okay, now here is liabilities, decrease in cash. Again we have a cash, decrease in cash is what? This is credit, and here we have decrease in liability, and that is debited. Okay, okay, here we have here, okay, in this step we have cash, cash decrease, so decrease in cash, that is credit, and decrease in capital, that is debit. Okay, and this is also debit. Now in this step, increase in cash, we have debit, and decrease in asset, that is credited. Okay, and this is also decrease in capital, decrease in capital, debit, and this is also debit, debit and debit. Okay, now payment of expenses, so this is decrease in cash, so decrease in cash again is credited, and here we have decrease in capital, and that is debited and debited, debited and debited, right? And then we have the next step, right, we have allocation of as balance. So here increase, capital increase, so increase in capital, that is credit, and here is decrease in capital, that is debit, and here is debited and debited. Okay, final payment, we have a cash, so decrease in cash, that is credit, and here is decrease in capital, and that is debit, and also we have it is debit, sorry, debit and debit. Okay, dear students, I hope you have learned, right, and what is the installment liquidation. Okay, so what is your homework? I will ask you in next class, when you watch this video, at the end you have to pass the journal entries, right? It's very much simple, like we have done in the first lecture. Okay, just in the journal entries record all these values. So the first journal is what to debit, that's clear. In the yellow, that is debited, and you have to explain it also, okay? And this is credited. So this is your homework, and if you have any question, and you can ask me, and you can ask me in your group, and inshallah we will discuss it, okay? So have a nice time and good luck.